All right. What is up, traders? What's up, tycoons? We have to talk about what's going on in the market right now. Just a quick update on what's going on and what's really happening now. We're seeing very bizarre things happening in the market right now. We're seeing treasury yields go up. We're seeing the dollar go up. We're seeing oil go up, and we're seeing the S&P 500 go up. Somebody is about to get caught on the wrong side of this trade. So you need to be very cautious. Today is quad witching. So I want to put an update for you guys out in the morning. Don't rush into anything. Let the positions develop. Now, this is the TNX we're looking at right here. This is our 10-year treasury yield. Now, this thing is following the analysis beautifully, right? And honestly, it's kind of painful to see because really this is not what I want. I don't want necessarily yields to go higher, but it's looking like, that's a strong possibility, right? When we zoom out here, and we take a look at our structure that we had, okay, we had our initial 5-wave structure to the upside here. We got our ABC correction, okay? And then we talked about, if this is going to play out, we're going to get another 5-wave move to the upside. And this micro 5 right here, this basically a sub count, 1, 2, 3, 4, 5. This was our wave one up, right? And then we were looking for an ABC correction. And I haven't even adjusted these drawings, guys. We came down, we got the ABC for the retest of the original trend line here, right? And look at where we're at. We're back up here at 4.33. Now, a lot of people didn't think we would get to these levels when the 10-year was at 4.08. When we look at crude oil futures, I've been talking about energy for a while, guys. And this is actually the wrong chart. Here's the crude oil futures. I mean, take a look at what we're seeing here. Okay, if we even go out to a weekly time frame, right, we're seeing a huge breakout. All right, and we can see that we have old supply, old resistance becomes new support. We tagged that support this year in 2023, and we've just been rallying ever since, right? And we had another zone here. We actually broken out of here and breaking out from a long-term downtrend, right? Basically from the downtrend of 2022. And remember, this is a weekly chart. This is looking very, very strong. If we were to zoom out even a little bit more, okay, you can see that we've actually broken another long-term downtrend. Okay, and so it's very possible that the recession that everyone is talking about and predicting, it's very possible that it could come due to things like energy. Right now, it's not going to happen overnight. And right now, what the market's really pricing in is a soft landing. That's why we're seeing the S&P 500 rally, even though inflation numbers are coming in hot. Right? People are saying, well, you know what, inflation may be coming in a little bit hot, but we still think we're going to have a soft landing. But look at this. This is from the financial crisis, right? We've had this long-term downtrend in oil prices. We broke out here, all right, retested that key level, and now we're breaking out from an even shorter downtrend. Right, this is stuff that we need to be cautious of. We take a look here at the dollar. We go back to the dollar. The dollar has been super strong. We'll go back to a daily time frame here for the dollar, and we're at a make or break level right now. Okay, we have this area of liquidity right here. This is a very important zone from 105.6 down to about 104.5, let's call it. Right, and you can see we had the inverse bump and run pattern. I've mentioned before, this is one of my favorite patterns that I've been trading in 2023. Right, you have your prevailing downtrend, then you have the bump down. We got the bump, we got the run, right? So this is your prevailing downtrend. You have the bump down. Here we got the run back up to those prices. I mentioned as well, once we got above 102.765, that the probabilities of 100% retracement increase significantly. If we were to come here, okay, and just put on an extension real quick, okay, and take a look, it's very possible that the dollar could be heading up to 106, 107, right? We have to look for a direction and see where it's going to go. But this is what's so strange about the market right now. Okay, if we were to come on here and tag on the S&P 500, okay, and then also tag on crude oil futures, all right, and then we tag on treasury yields on top of this, right? We'll put on the TNX. Okay, and then we'll come in here and we'll make this a line chart as well. We'll remove some of these drawings real quick. And look at this on the daily, okay? This is a daily time frame zoomed in. All of them went up, right? They all went up yesterday. And today we're seeing the dollar kind of flatten out a little bit, but this is not what you normally see, okay? You don't see the S&P 500 rallying with the dollar, with treasury yields, and with the Dixie, and with the dollar. These are very strange, signs right now. And today is quad witching. All right. Basically, this happens about 4 times out of the year. There's going to be all type of contracts expiring on futures, on options, and many different things. And today is one of the most volatile days in the market. You're going to see huge amounts of volatility at market open, and then you're going to see people start to hedge against those volatility. Prices going to start to squeeze a little bit. All right, and then you're going to see massive volatility heading into the close whenever those contracts expire. So, pay lots of close attention to the strikes today. And strike prices are going to be very important. Right now, the big thing to look at, okay, and kind of the signal for the S&P 500 is the VIX. Okay, so we're seeing the dollar rally, we're seeing oil rally, we're seeing treasury yields rally, and we're still seeing the S&P 500 rally. We mentioned this video, and the last video I did was like on the VIX. I had a dedicated video to volatility, and we mentioned this 1274 level. Now, we did just bounce off of it recently, but look at what the VIX is doing. The VIX is making lows, guys. The VIX is heading lower. That's why we're seeing the S&P 500 rally. The VIX is telling you guys a different story than what the dollar and what treasury yields and all of those other things are telling you. When you think about it, treasury yields are back where they were when the S&P 500 bottomed. Okay, we'll go into that in a second. But, if we break through this 1275 level, it's very possible the VIX is going to head down to 1177, right? That's really going to be our next major support level. And it's a level that we haven't tested in years, okay? It's a level we haven't tested until January of 2020 was the last time we tested that level. So we're seeing, insanely cheap volatility. So what does this mean when the VIX is so low? Well, it means that right now it's cheap for you to hedge your portfolio. Okay, so as the VIX goes up, option prices tend to be elevated with volatility and due to option pricing related around volatility. So the VIX is one thing you want to pay attention to, right? Now, a lot of people say the VIX is broken. Well, maybe the VIX just knows something that we don't know, that we're not going to find out for the next 2-3 months. Right? I mean, obviously the VIX is telling you a different story than some of the other metrics in the market. Now, when we go back to treasury yields, right, and we go on to TNX, and then we throw on the S&P 500 here, all right, you'll see what I mean, okay? The market is not really worried about treasury yields, right? If we were to just, again, throw this right here on a line chart, okay, and we go back to October. So let's go back to October here. So this is October of this is 2021. Here's 2022. Sorry guys. Okay, so October right here, you can see where the S&P 500, this is right around where we bottomed at, okay? And look at where treasury yields were. Treasury yields are actually higher now, okay? So let's put some arrows on here so it's a little bit clearer. So here's the stock market bottom, here's treasury yields, right? Stock market bottom, here's treasury yields today. And look at what the S&P 500 has done. The S&P 500 has continued to rally. So the market is telling you that it's not really concerned about treasury yields, right? I mean, just take a look at where they were and take a look at where we're at right now. Both of them are going higher. So, the bond market is telling you that, hey, there's a recession. The stock market is telling you, hey, we think that we're going to get a soft landing, right? That's basically what we're seeing right now. And, it's a very tough environment, all right, for both bulls and bears. If you've been bullish, not everybody's been bullish. It's been a little bit difficult sometimes to find the bull thesis, especially coming out of 2022. And some people have been trapped in the bear narrative. If you're a bear and you're seeing everything rip higher, and you're seeing things like oil, the dollar, treasury yields go higher, and you're trying to short this market, it's been very difficult for you. So what you have to do is you have to trade what's happening. You have to trade the charts in front of you, not the charts that you want. Okay. Like I mentioned, I'm not really wanting treasury yields to go higher, but when you look at the Elliott wave structure here, after completing our ABC correction, we ended up getting this 1, 2, 3, 4, 5 up, right? And we got an expected 1, 2, 3 down, okay, ABC down. And it's very possible that this is going to extend even higher, right? And so if we try to figure out where it's going to go, we'll put some price targets on here, all right, and take a look. And now we can see them going up to 4.361. Okay, and then 4.533 right here is potentially going to be, the next big target if treasury yields actually break out. Now, this could all just be a fake out in the treasury market, and treasury yields could be, trying to put in a double top here. But I've mentioned before, right? A double top is really not confirmed until you break the neckline. So if you're trying to say that this is a double top, to really get confirmation, you'd have to have, the tops here, and then your neckline would be actually right around in this area here. Okay. And this would kind of be your neckline. And that's when you would potentially get the double top to really play out. And it would look something like this. And that's not going to happen overnight, right? That's going to take time to progress, time to develop. So just wanted to update you guys on, the strange things that we're seeing in the market, whether it's the dollar rallying at the same time as oil and the S&P 500 and treasury yields all going up at once. That's not typically how the market moves. So you need to be cautious heading into today, especially and moving forward. Okay. Trade the charts that you have in front of you. If you see a breakout, if you see a breakdown, go off of the price action that you're seeing, not what you want things to do, not what you think should happen. You have to trade what is happening now. I do want to mention, sign up for the free newsletter. Okay. There's also a website associated with it. There's a link in the description. I've got a really good trade idea that I'm putting out at the end of today. There's a stock that I've been paying attention to, and I kind of forgot about it. And, I was talking to someone yesterday about it, and they reminded me, and there's some really interesting stuff happening on the option chain with that stock as well. And the chart looks pretty good. So, I'm going to go ahead and include that. Not only is there free trade ideas, a couple trade ideas every single week in the newsletter, but I also go over just really good, free valuable content that you guys can get directly to your inbox. And you can always go back and read them through the website, kind of puts it in a little bit of a blog format.